All right, good morning, everyone. Today's Tuesday, July 22nd, and I would like to welcome you all to a new live stream. And there's a couple of things that have been roaming around my mind lately about what we could see moving forward. I'm not gonna lie to you, it's a little bit challenging for me trying to decipher um, what's been going on today, but there's reasons why and why not, why we haven't been making new higher highs, and I mean, lots of it have to do with the inside information, right? That you and I will get access to, or we're not privy to that kind of stuff. But I mean, the proof right now is in the markets that I want to see it go both lower first before it can get higher. And what do I mean by that? So on my markets, you'll see that we have possible lows to seek more shorts on. This whole yellow Fibonacci sequence that we have set up, this is our buy program. So of course, smart money will look to buy more at discount so that it can expand higher. One thing that did throw me off, however, was the use of this old low from AMs at 9:30 yesterday. And the reason it threw me off was because the ES or US 500 has already dipped down below those old lows, right? NQ hasn't. So I will still consider that as a SMT divergence. So last night around 10, I was looking at this and I was predicting it'd be going down lower, down to reach down those old lows. But this morning we haven't used it quite yet, and now we're creating this expansion up higher, disrespecting the OTE based on this range, high to low. We do have another higher time frame OTE. We have this high to this low. Okay. And now remember, the market's used to manipulate people into thinking that it's going one direction. Sometimes it's used to just even tease you into thinking that it's going expansion higher, but it's only going up to high premiums. And there have been many trades where I have been involved in where um, I have a certain profit objective and it doesn't quite reach it, and then it fulfills, and then it keeps going down lower. So because we're seeing this buy program in play, I would like to see a cracking correlation as it's going down into discount before it can expand higher. We haven't seen that quite yet in NQ. It's been going down lower, and it's been respecting its, you know, partner in crime, ES. So I do anticipate it lower. I do think this is a fake rally up. It's only just gonna go up there to take out or take out weak shorts, or to just take a seat in their position so that they can just ride it out longer, lower into maybe pre-market lows from this morning or maybe even yesterday's Asia. We would just have to wait and see pretty much. At this time, I'm not looking to get involved into anything, any trades. I just want to wait for more information essentially. I'm going to be listening to some music. Of course, I hope none of it's getting spilled on stream. Just want to take a quick look at something real quick. Okay, cool. So I just wanted to make sure that I was able to stream at 1440. I just still kind of new to this live streaming thing, but every day I'm trying to get better, right? Okay, so that's what I'm trying to look at. Of course, this is the ultimate goal. Ultimate goal is to reach these new higher highs. Let's see if what we can find on the lower time frames to support our theory that we might go lower. So let's see here. Oh, I also forgot to pull this up. Something I want to show you too is the price movement of the dollar. So if I go up here, notice that we reached our profit objectives from yesterday. I said we were looking to fulfill this dealing range from this low to high, kind of reach back down to these lows, and on Monday we reached towards the end. Now, in terms of what's going to happen next for the dollar, just seeing it, it's not looking very good. I do anticipate dollar losing its value even more. From feeling pretty bearish, right? Especially because you look at interest rates. Interest rates have been going down as well. I do anticipate this rally to keep going down further. Bonds have been going up higher. Where are you? So interest rates, bonds. I do anticipate bonds to continue up this rally. We have S&T on the lows. You'll see here, low, higher low. And the US bonds here, we have a low, lower low. So I do think that's a good, let me see here, for June 6. June 6, go back to June 6. Yep. Lower low, and then low, higher low. So I do think that's the S&T that's needed to boost this thing going up. And if this is going to keep going up, it's going to cause what? Interest rates to drop, right? And we've made a formation where we're looking to see this low to lower low get filled quickly. But quickly in this time frame, it's going to be a couple months. I'm giving it till August for this to be filled, for this low here. If that were to happen, what's going to cause the dollar to react? How's it going to cause the dollar to react? Printing lower prices. So if that's going to be happening, other currencies such as British pound, Japanese yen, like all, you can anticipate these to keep rallying up higher. And if that's going to keep going higher, what do you think is going to happen to Euro USD? It's going to keep going higher as well. So that's kind of like where I'm getting my my intermarket analysis, if you will. So if that's going to be going up higher and US dollar is going to be dropping, it's going to be a risk-on scenario for the stock market to keep rallying up higher too. But in order to do that, it first needs to accumulate more shorts, take out the weak shorts, and then dip itself into a buy-side liquidity pool for it to keep going higher, right? Because these people are greedy, right? They want to make sure that they can make as much money as possible on a certain move. So if they can make money on the downside by tricking up shorts, thinking that's going to keep going long, or those breakout artists, take out the weak shorts, take out the breakout artists, and then take out the longs here as well, right? There are stop losses down here for buyers. Take them out too. They can take two parties at once. Let's see here. Okay. All right. So let's see how we can dive into this price action and see how else we can see price right now. Okay, so it's 9 o'clock. Let me. There you go. And then just put you down here. Okay, so this area is balanced from this high to this low to this high. So area is balanced. Look at how it's been using that as support. We'll take a look at okay, we're looking at this to fill quickly, which it did. Okay. Then lastly, the only thing that puts me nervous about this buying program is that there's no liquidity here to refer back to. Everything kind of has been used already. So there's no telling how high this thing can go up. Would have liked to have seen this like after 9:15. After 9:15, I would have liked to have seen this act sooner. Like we have this buying program from this low to this high. That's good, but we're looking for reasons to sell. You're looking for this to fill up quickly. It did. And now we have this structure. I like the idea of this being treated as a premium array since it opened up. Notice how we wicked above it. Something too that I've been playing that I think is going to make this thing bullish is this. Where are you? Go away. How do I make you go away? Okay. This. This is the electronic trading hours gap. And if we zoom out for a moment, you'll see that the lower quadrant has been acting as support via those wicks here. Look at the bodies, how they're closing in just above it, and it's rallying up above. I do want to see this premium open gap kind of get filled as it's going down lower to get more sell side liquidity, make that cracking correlation, close above 25, and then send that price higher. But first, we gotta get ourselves into a deeper discount before we can start seeing something like that, don't you think? Okay, I see a lot. Actually, I see a lot of sell side down here too. This may be also everything we need. Price can just dip down to these old lows, get us that SMT, aim to go higher prices. This OT I'm referring back to until 11:30. Notice that its equilibrium comes at 23,186.5. This wick up high comes at 2386.9. 186. So it went slightly above equilibrium. That's cool. That's what we want to see if prices to go down just a little bit lower. Let me delete you real quick. And then these were the 12 a.m. lows that were used in SMT yesterday that we saw live in the market where we traded above 25% and then it just exploded up higher. And then we'll mark you orange because you were referred to, even though you were in tap, you were already referred to on US 500. Let's take a look at US 500, see if that low was already referred to as well. Yeah. Actually, not yet. So we'll see the market open up in a couple of minutes. So at 9:30. Okay. It's a lot of drawings up here, don't you think? I think everything below should just go away. Cool. And we still haven't met those projected highs from yesterday. So I'd like to see this get filled too. Actually, you know what I am interested? If we're gonna go down lower, I'm wondering if we can set up a trade. Let's see it. See what will happen. I'm wondering if we can set up a trade to go lower based on London session highs, right? Maybe we can expand higher prices. So let's see here, right? Let's do till here and then take profit. Too close. Well, maybe we'll refer back to this and then see how well we do with that. 20 handles, that's 1208. We should gotta go up here. Okay. Let's see if we can get something like this form where we used London session highs as like a turtle soup, right, for previous resting buy side liquidity, and then use that to short on off of to get ourselves to lower prices. See what happens, right? Oops. So again, if you're just joining the stream, yes, I am still bullish on indices. I do want to see a break to newer highs, but first I do think we need to accumulate more sell side liquidity before we can see a sponsorship in that. We're about to see the market open in a couple of seconds. I have seen that before too, where we refer back to old sessions. Even though they're not important, they're still used as like liquidity pools to like trigger stops so that we can get into shorter. And I've seen it in reverse, where we use the highs. Actually, no, yeah, we used the highs of that previous session. What was that? To head down lower first before we went higher. I think that's probably what's going to happen here too, again. Now it's 9:30. Notice how our didn't get triggered. It's because we opened. See that opening? We opened above our ideal entry price, and we didn't get triggered. Isn't that crazy? Gap risk is real. Oh, there was just a delay. But okay. We're now approaching the CME opening lows. Seeing how we react there. Okay, so it's still no crack. Still no crack. Cracking correlation just yet. Yeah, it's working in tandem so far. Now let's see if these lows will be the ones that'll take us up to higher prices. But that entry told you it was going to be from, I don't know, we'll see. Since we moved so much already, let me just break even. Now we'll see how low we react of these lows too. See, this is where S&T gets a little tricky. You'll see that the 7 a.m. lows come in at a lower low here. But the 7 a.m. lows come from here. So you will do a low, higher low. See that? Okay, so we're not doing anything just yet. Um, Looking to see how much more we're going to expand lower here. Notice the Dow Jones. See how that's opening up? Let's look into CFD's 30. Look at that. It went up higher. Crazy, right? So now we've made that S&T low. We closed above 25%. I mean, and we're still in this big buy program. This could be the retracement that we needed to see prices keep going higher, right? I mean, just give it your best guess. Essentially, is what I'm trying to say. Okay, let's go ahead and update our markings a bit. So it's 9:30 now, right? Let's see here, 8 o'clock. Okay, that's interesting. Update the markings here. A lot of push for this dealing range low. So since we have this dealing range, that B leg tends to extend further once we make a new lower low. So we'll see if it will retrace back to 75% or equilibrium before I can keep going lower. Low, lower low, low, higher low. See that? The other low I see price referring back to, it's gonna be this from Sunday. So we could also possibly be getting as low as that. That's a shame. I would have been very interested in seeing a expansion up higher, seeing how we opened up on Dow Jones. That's why market symmetry is still something that is going to be dictated with experience. Look at this. This was referred back to already, so you don't even have to worry about that. Look at this. It's really behaving in a way that I don't like seeing it. Usually, I prefer seeing it on the first stage SMT, how it reacts down to this low to this lower low. I prefer that SMT, but look at how it's behaving here. low, lower low, low, higher low. That's something I would anticipate if we were seeing price that in conjunction. Like this would have also made a low, lower low here in this situation. With this second stage SMT, because they reacted the same, I would have liked for that to be retracement up to premium, to equilibrium, and before it can keep going down lower. Why? Because they're both in conjunction. There's no cracking correlation on the lows. The price should continue that mini sell program is had. And let's see here. I mean that high up that old London high, killer, killer turtle soup. We're looking for pre-Asian lows to be hit. I think we'll see it get hit on stream. Let me zoom out a bit. If these Asian lows get hit, it's gonna be a really steep climb. It would need something like an economic news driver for it to get back up to 25%. How do you feel right now? And this is really exciting. That turtle soup was still really good. Now I'm interested in learning more about why this low wasn't as reactive as I thought. And I think I know why. It was inside this internal range of liquidity from this low to this high, internal, compared to the external buying program. So even though it behaved in the manner that we would have liked to, the fact that there was no SMT, there was no cracking correlation informing that low, this internal low was invalid from the start to this high, that there was no liquidity to refer back to. It was also, in a sense, just nothing to refer back to. The dealing ranges need to be formed in a way where it is supported by previous session liquidity, and it wasn't. So that's kind of like my theory. Of course, when you're doing these kinds of things, you want to like test your theory and back test. So that's a question I would write down in my journal and investigate it further once we're done backtesting. Asian lows were hit. Okay, now you want to take up. Hold up, where's my music, guys? One moment, please. Don't you just hate it when you have something going, like music, and then just YouTube just pauses it for you? And they're like, hey, are you still watching? Duh. I wish there was a way I can off that. Sorry guys, let me just focus on my dang music. But one thing I want to point out is these loads from Asia. Look how they were pierced. Are we getting that same pierce treatment on ES? We're about to. We also got the lows as well. Oh, hold up. New York PM lows from Friday. No, I think this was a mistake. Should be down here. Yep. And is that getting pierced too? Not yet either. Now we're looking at this whole buy program low. See this? I would just trade it down below it. Now is when we have to zoom out, right? And see what is happening here. Price only went up to rally. Disable all of this. We have a formation where we've seen a type 2 dealing range as well, right? This low, higher, low, higher, high. This low to this high is a dealing range. What kind of type of dealing range? Type 2. Type 2s tend to be the ones where you can anticipate a reversal. But they're also a dealing range that I like to prefer where they're strong. They're strong in the sense of when they're going up. When they're coming back down, they tend to be kind of weaker. So even though we've made a buy program, right? Where did I tell you it was the buy program? Let's see here. Yeah, this was the strong buy program. We would have liked to see it act in a way where coming back down at its getting sell stops, there should be a cracking correlation. We didn't get to see one until this morning when it woke up, when the market opened. And then you saw that it went up just a little bit before it retraced up just a bit up to go down lower. We think it's because of the internal liquidity factor from this low to this high. There was nothing to anchor it to, but this just proves the idea that now we could be going down to lower prices. Could be anticipating a reversal, right? Type 2 dealing ranges tend to be reversal trades too. And then look at this. This 15U anchor right above turtle soup. Gonna anchor your OTE fibs from high to low, but the only thing that I felt wary about planting OTE up here was the fact that it wasn't being backed up by the higher time frame balance price range. If the 15U was like embedded, it would have acted like a propulsion block where it would have reacted from a previous balance price range, and then I would have liked to have seen the OTE levels get respected. But because it wasn't, it got treated as turtle soup. See that? So now we're looking to see if maybe even the open flow low will be getting hit. So for M and Q, that will be 23,110. So we'll add an alarm. And then we're going to start reevaluating about whether or not we're actually in a buy program in the stock market. Holy smokes. I think we might have hit it. I doubt it. No way. Let's take a look at the Friday 1 p.m. lows. Oh my gosh. We actually hit it. Okay. Wow. What's the next liquidity pool? AM session. AM sell side liquidity from Thursday. Will that end up get hit? Wow, look at this. So we fulfilled the type 2 dealing range, closing. Oh, look at that. Isn't it wonderful how you see things after the fact? Look at this. Monday's high. This is, but yeah, that's Monday's high. Compare this high to this high, right? We have a what? Failure swing. But look at here. High, higher high. No, isn't that SMT? Okay. What a way to fool everyone. I mean, I thought it was going to keep going down to discount, but not like this. Wow. Was that filled? That electronic gap? Yes, it was. Now we're seeing that in futures get filled, but in US 100 it already got filled. Hang on, one moment. Just gotta step out for a moment. Well. Now what do we have here? Flop hit, of course, on M and Q. Let's take a look back into M and Q and see if what kind of hints were left for us in the higher time frame for us to anticipate something like this. First, we were overextended. See that bearish breaker? Okay, forget that bearish breaker. This big buying program from this low to this high. Was there SMT on that high? No, everything was moving in tandem. So we're still in this buy program as well, right? So if we're gonna expand lower, we should first see some what was left behind. What was left behind? Well, we still got AM lows, London session lows, Asian lows. We still got this whole set of liquidity pool here that we could retrace back to, right? In the form of what? SMT. See that cracking correlation, right? There's still a chance for market to create new higher highs. It was probably just garnering up all those sell stops before what? Expansion. We still open up here, Sunday open. Okay? That can still be where are we trading? If we're going long and trading below the opening price of the week, isn't that still bullish? So there's nothing for you to fear. This is just shaking off those weak longs right now. Remember, the algorithm is here to scare you. You gotta stick to your bias. My higher time frame bias is that we're gonna see prices go up higher still. Right? They're still moving in tandem. There has been no cracking correlation on the highs just yet. Everything's been going smooth. No crack. I mean, in the higher time frame. And now we could even see these lows get triggered. See? And if that happens, look at how much of a retracement ES. See that? That could be enough to take us so that we can start anchoring our fibs from high to low, make it close above 25, keep going higher. Like if you're a long investor, right? Let's say you're in this market long. Wouldn't a day like this shake you up? I mean, seriously, you see these big fat engulfing candles, right? And then wouldn't that just make you feel uncomfortable about your position, right? What if you have your stop losses down here, right? Or stop losses down here, right? Talking like, I don't know, let's say you're an investor and you got something like this going for you, right? But you're not going to sell because you got the money to do so and you can afford a position like this. So you don't want to set it to break even just yet. But your stop loss just so happens to be an unfinished business from Thursday last week. We're going to use those lows against you to get you out of this position, right? So smart money is using the money that you have here as risk so that it can offset you, right? And if they're going long, see the cracking correlation here, we can use that old low as turtle soup for it to go up higher. See, there's resting stops there. That's what I'm trying to say. Because think about the many people who are long right now, right? They have their stop loss up to here. Some of them have their stop losses down here. Some of them have their stop losses down here. So there's an area here of gray pools where stops are just stacked up together. Now, if they're greedy, they can take all of them, and then we can see an S&T divergence on all of them, and then see how we can use that to get higher prices. Look at the DXY. Not exactly printing higher price either, right? All right, guys, listen. I'm not gonna stand here and waste your time any longer. I think it's gonna be a really horrible AM session. Just keep expanding down lower. So I think that's what I'm gonna be doing for now. Looking for Thursday's AM lows to be hit as well. All right. Let me see PM lows. Let me take a look at this one last time. Oh yeah, they're working in tandem right now. So it's not that sell side delivery is in effect. It's just working off all weak premium levels to sponsor itself to keep going down lower. Right? This is a higher time frame form of manipulation. If I was going in there trading every single 30-second order block, today you would have gotten wrecked. I mean, for sure. For sure, for sure, for sure. But why did something like this need to happen? To generate more interest. Check it out. We have a high. Where's that 10 o'clock? What shit is this? Look at that huge opening range. Now, if price does displace lower, now we have a new high to work off of in the future. I really thought we were going to use these pre-market lows to go up higher. So I'm going to do some self-studying. Thank you so much for watching, and I'll catch you in the next one. But yeah, profit targets, AM session low from Thursday. We'll see what if it ends up hitting that area soon.